What's going on, guys, and welcome back to another very exciting video. In this video, we are going to be talking about Coca-Cola, and I got a recent comment asking me to go over the financials behind the company. However, I wanted to add a twist into it. I want to compare Coca-Cola versus PepsiCo. These are two very similar companies that a lot of people look at adding either one or the other into their portfolio. So what I want to do is I'm going to take a look at their revenue, their EPS numbers, their valuations, and determine which, in my opinion, is a better buy. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. We're going to start by taking a look at Coca-Cola, and year to date, Coca-Cola's stock is down almost 16%, which is very surprising for a stable dividend company. If we look at the last 5 years, it is also only up around 14%, which equates to around a 2 to 3% return year over year. And if we zoom out further, we can look at their max chart, and in my opinion, the big problem with Coca-Cola is actually Warren Buffett, because Warren Buffett bought into this company back in the 80s, and if you look at from, let's say, 1987 to 1997, the stock went up over 1,000%. So Warren Buffett did very, very well in that time frame. However, if we look over the last 25 years, we can see that the stock has only gone up around 80%. And a lot of people buy into Coca-Cola just because Warren Buffett owns it, and they understand the stability of the business and how much Warren really likes the company overall. But it's also important to understand the buying period that he had versus what is going on now. Over the last 25 years, we have seen hardly any growth in this company. However, in the 1980s and 1990s, we saw a tremendous amount of growth from Coca-Cola. And before we get into a lot of their metrics, I wanted to take a look at their valuation. So Coca-Cola right now is trading at around a 19 forward P ratio, and that is down from around a 25 forward P ratio about a year ago. In my opinion, Coca-Cola, with the growth numbers that they're putting up, should really be trading anywhere from a 10 to 15 forward P ratio. One of the things people love the most about Coca-Cola is their dividend, and their dividend has been very strong. There is no denying that. They are one of very few companies that have increased their dividend for over 50 years, which is absolutely insane. Right now, they're sitting around a 46-cent dividend for every share that you own, and they've done a decent job of increasing this over the last couple of years, where they've increased it by around 4 to 5%. Another thing that's important to keep in mind is the dividend payout ratio, and for Coca-Cola, they are sitting at a 75% payout ratio. Because I am younger in age, I generally look for companies that have a little bit lower payout ratio, because that gives them more room to grow into the future, anywhere from 50 to maybe 65 for the high end. However, if you are closer to retirement age, a 75% payout ratio is generally seen as being safe, and a lot of older people closer to retirement like higher payout ratios just because they generally result in higher yields. One of the most important metrics for a business is their EPS growth, and we can see here on Yahoo Finance how Coca-Cola stacks up. So for 2023, there are 22 analysts covering the stock, and they have an average EPS estimate of $2.64, a low estimate of $2.58, and a high estimate of $2.69. And the first thing that should really stand out to you is how small this range is between the low estimate and the high estimate. We're talking about 11 cents. That speaks to the stability of Coca-Cola's business and how much faith analysts have around them hitting these EPS numbers. And if we see Coca-Cola hit $2.64 in 2023 and compare that to their last year number of $2.48, we see that that equates to around 6.4% growth year over year. And for 2024 numbers, we see that the average EPS estimate is around $2.80. And if we compare that year over year to $2.64, that would be another year of around 6% growth in terms of EPS. 6% EPS growth for a company like Coca-Cola is actually not too bad. However, when we look at their revenue numbers, their revenue has really struggled. We can see that they peaked out at a revenue of $48 billion, and this was back in 2012. However, since then, their revenue has fallen in a very significant way to a bottom of around $33 billion in 2020, and since then, they have done a good job of increasing prices as inflation has increased, and this has helped their top line numbers get back up to around $44 billion. However, it is still down from their all-time highs. And for Coca-Cola, their EPS growth has been relatively flat as well. We can see in 2012, they brought in around $1.97 of trailing 12-month EPS. If we look at today, the trailing 12-month EPS is around $2.42. This is only about 25% growth over the last 10 years. Now let's go ahead ahead and jump into PepsiCo, and we can see year to date PepsiCo is down around 11%, which is slightly better than Coca-Cola. If we look at the last 5 years, its return is significantly better than Coca-Cola, up 45%. If we look at the max chart, I also like this better than Coca-Cola because we see a very consistent uptrend. When we look at that same time period that we looked at for Coca-Cola from 1987 to 1997, Coca-Cola had a 1000% return. However, if we look at PepsiCo, it only had around a 500 to 600% return. But again, PepsiCo's chart is very much in a upward direction. When we jump back to Coca-Cola's chart, we can see that they went through a very long time period from around 1997 to 2010 where the stock basically traded sideways. And part of what this could have to do with is the stock being overvalued in 1997. And PepsiCo's revenue is a lot more stable than Coca-Cola. If we look back in 2012, they were bringing in around $67 billion of revenue. That did drop down to around $61 to $62 billion in 2016. However, they've brought it back up to around $67 billion by 2020. And from 2020 on, they have seen a lot of pricing growth where they have been able to get their revenue up to $91.6 billion. And in terms of EPS growth over the last 10 years or so, we see a little bit more strength in PepsiCo's numbers. Back in 2012, they were bringing in around a trailing 12-month EPS number of $4. If we look today, that number is up to around $6, which is about a 50% increase in EPS over the last 10 years compared to Coca-Cola's 25%. And we could take a look at PepsiCo's EPS numbers on Yahoo Finance as well. There are 19 analysts covering the stock for 2023, and they have an average EPS estimate of $7.54, a low of $7.46, and a high of $7.60. So that 11% growth is almost double what we're seeing from Coca-Cola's EPS growth. However, if we look at 2024 numbers, analysts are projecting $8.13 of EPS growth, which when we compare that to $7.54, we get about 7.8% growth year over year. And for valuations, PepsiCo, even with its additional growth, is trading at about the same valuation as Coca-Cola. Their forward P ratio right now is sitting around a 19.57, which when we compare that to Coca-Cola, they were sitting around a 19. The last thing I wanted to take a look at is the brands behind these two companies. Coca-Cola is basically only drink brands. They have Body Armor, they have obviously Coca-Cola, Dasani for water, Diet Coca-Cola, Fanta. They also have Minute Maid as well as Simply Lemonade, and they've branched a little bit into alcohol as well. They have Spiked Simply Lemonade. So they have a few different brands, but they're all within the beverage industry. One of the things I also like about PepsiCo a little bit more than Coca-Cola is their diversity of products. They offer foods as well as beverages. They own brands like Quaker Oats, Gatorade, Lay's potato chips, Mountain Dew, as well as even some dips like Tostitos salsas and Sabre. And this diversity offers PepsiCo two main benefits. The first being growth. They can grow certain sectors of their business while keeping others stagnant, and this really can keep the company moving forward and grow top line and bottom line numbers. The second benefit is the diversity of products allows them to really withstand some economic concerns. People are always buying these products because they never go out of style. People are always buying Quaker Oats for breakfast food. They're always getting drinks, whether it's Gatorade or Pepsi or Mountain Dew, and they're always generally buying chips. So they are still a very safe company in the types of products that they are offering. So personally, when I look at PepsiCo versus Coca-Cola, I think PepsiCo is the better buy. I like the EPS growth that we're seeing from PepsiCo, the top line revenue growth as well, and the diversity of brands that they offer. I don't actually own any individual shares of Coca-Cola or PepsiCo. I do own them through some ETFs. However, if I were to buy one of these two companies, it would be PepsiCo. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.